Welcome back to QAV TK. This is episode 802. We're recording this on Tuesday, the 14th of January, 2025. How are things at Cape Shank?
Good. Busy. As you can see in the background, there's still plenty of unboxing to do.
And not the
So,
fun unboxing, which is
no,
no,
correct. No,
nothing. Didn't all arrive from Amazon. It's the boring unboxing. Oh
it
yeah, all that
is.
stuff.
And it's like we're at the stage now where we're having to buy more stuff, storage stuff to put it in. So,
Just leave it in the boxes.
yeah, well, you couldn't get into the bedrooms if you did that. So
Right.
we bought some more wardrobes and drawers, which has helped. But I've got to get some office storage now, filing cabinets and things like that. And some more wine fridges and whatnot. So yeah, it'll
And
be
get them
going on
delivered
for a
to
while.
Cape Shank.
Yeah, which is okay. We can do it. It's not
Oh yeah,
easy.
uh,
Yeah, it's getting better. It's
is
not
it
as far away as it used to be.
Frankston? You can get stuff from Frankston or something now.
Yeah,
Yeah.
Mornington, Frankston, whatever.
Mm.
Yep.
Well,
Yeah.
let's get on to investing, Tony. What's taken your attention from an investing perspective this week?
I noticed when I got the data from Alex that there's a lot of commodities which have become buys again this week.
A lot
So I
of
should
things have
highlight.
turned around for some reason. You got any theories as to why all of those have become buys all of a sudden?
I have not. Surprising. Just to run through them, crude oil, copper, aluminium, LNG, and lithium, our old friend lithium, are all back as commodity buys. I suspect lithium is bombed out, so it had to turn around at some stage. And you could probably say that about a lot of those. Crude oil's down to, oh, last time I looked, it was $74 a barrel, so that's pretty low. And it's turned up. So, yeah, I don't know. I mean, there's a lot of turmoil in the markets as traders position for Trump taking office, for potential interest rate cuts or delays to interest rates, for all the geopolitical stuff that's going on in the world and what might happen between now and inauguration if Biden can fix things, or if he can't, what Trump will do. So a lot of movement in markets.
Yeah, I mean the crude oil one I find interesting because and the LNG because I'm assuming that Trump will get in, force Zelensky to do a deal with Putin, and then probably do something about the sanctions against Russia,
Ooh.
which you think would mean all of that Russian
Mhm.
oil and LNG will be back on the market, and they'll, I don't know, get the Nord Stream rebuilt or something. It'll flow back into the market. It might take a while, and that would mean there's more supply in the market, not less supply, and the prices should go down, not go up. But what the hell do I know?
No, look, frankly, I agree with you. Not so much for that, because I think people have been buying Russian oil covertly anyway. There's all sorts of stories about tankers rebadging themselves in the middle of the Atlantic from Russia to wherever else and then selling it. Maybe not in the US, but a lot of the emerging economies. So,
It's like in movies where they steal a car and just put a magnetic plate over the back. They're just like slapping a magnet on the side, and people are
yeah,
going, yeah, whatever, no worries.
yeah, exactly. That cheap oil, sure.
Sure.
Yeah. So I think I'm not sure about Russia coming into the market, but it might have an effect. What I'm thinking of is when Trump delivers on drill baby drill, there's going to be a lot more shale oil drilled in the US and by US companies,
Ah,
which will
right.
flood the market. So I think you're potentially right. This might be a short-lived upturn for those commodities, but at the moment it's an upturn, and we play by the data, not by the crystal ball. So um, we'll see. I'll do a bit later. I'll do a pulled pork on Horizon Oil, which is very leveraged to the oil market. So
Mm.
there's there's been a few oil companies and gas companies on our buy list for a while now. So
Hmm.
it's time to have a look at them. Now the oil price has turned up a little bit.
What else have you got on your talking points for this morning, afternoon?
Afternoon. I came across an interesting article on the weekend, which is headlined, "Don't Listen to Wall Street Experts," Sydney analyst says. I'll just read from it. Came out of the AFR. Another year, another set of Wall Street predictions about how the S&P 500 will perform over the coming year. The forecasts come from top-tier firms like Morgan Stanley and Goldman Sachs and skilled analysts, but are they worth the paper they're written on? David Allen, not the comedian, the analyst, head of long-short strategies at Sydney hedge fund Plato Investment Management, says not only should these prognostications be ignored, traders should do the polar opposite. Comparing annual strategist return forecasts with the actual market return since 2000, Allen found that strategies have an atrocious track record. On the extreme end of the spectrum during the bear market of 2000 to 2002, strategists predicted a cumulative return of 42%. The actual return was negative 40%. In fact, the eternal optimists on Wall Street have never predicted an annual share market decline for the past 25 years, whereas 6 have been recorded. Recent performance isn't better either. Strategists predicted a slender 2% return for the past 2 years. The index returned 46%. But Allen says the forecasts weren't just inaccurate, they're completely off the rails. Analysing the relationship between strategists' predicted returns and the actual returns, he found a negative correlation. This means for every percentage point increase in predicted returns, the actual returns were a percentage point lower. Not only would you have been better off had you ignored Wall Street's best and brightest, you would have fared even better by doing the opposite of what they suggested, he said in a note to his clients. Analysts predicted gains every year between 2024 and 2024 between 1% and 22%. But we know there were several periods of major losses, dipping to negative 38% in 2008 against the forecast of 12.5% increase and gains as high as 23%. And the last quote I'll say is, in 2025, don't waste time trying to divine the market's next move, he said. Instead, concentrate on what you can control, identifying quality investments and managing risk. Let Wall Street keep its crystal balls. So I thought that was good analysis and certainly bears out what I've noticed in the markets in the past.
Yeah, nothing new for us, but it's or Peter Lynch, basically that's what he was saying in that video from 1994 that I played last week. And yet the vast majority of what you see coming out of the investment media and investment analysts is all predictions and basing strategies around predictions, right?
Yeah, and this is the time of year when they would give all their predictions, or they're asked to give predictions. Some people give them reluctantly. And look, it doesn't mean much, doesn't mean anything to me. But where I found it plays out poorly is when people listen to a financial advisor and a financial advisor pays these banks to give them forecasts about where they should be rebalancing their clients' portfolios into. And I think it's the dumbest game I've ever seen, where a financial advisor will tell you, oh, get out of Australian equities, get into the US equities, or get out of equities and get into bonds, or get out of bonds and get into gold. Or that, I just find that whole game inherently a casino, because no one can predict the future, and then having to rely on which is oftentimes 10 or 12 predictions about what each sector is going to do is just illogical in the extreme, I think. So just be careful if people are relying on that kind of advice.
But people, your average punter thinks that, well, I'm paying this person, they're a professional, they know what they're doing, and they're paying other professionals who know what they're doing. Is this assumption that these professionals know what they're doing?
Yeah, but that's just fees on fees, as we know. And oftentimes what it leads to, in a kind of obtuse and arcane way, is that it leads to you buying the market. So you may as well just go out and get a low index ETF, because, if they're telling you to move money into gold or property or shares or US shares or whatever, go and buy an ETF, which has the world index of all those different things made up into it. And if one goes down and another sector goes up, you hold the index. So, it's like holding a balanced portfolio, but without the prediction of professionals.
Yeah, but before we started doing this show and you and I started talking about this stuff, I don't think I'd ever heard that as common wisdom.
Yeah.
industry professionals don't have a good track record and you're better off just buying the index. I mean, Sammartino had taught me his Sammartino method, which was buying the index, but
Mhm.
and he said, no one can beat the index, which I now know is not true, but generally speaking, most professionals don't beat the index, so largely correct. Um, but he was the only person I'd ever heard say that. Not that I
Oh,
was
really? Yeah.
paying that much attention, but before no one else had just said, "Yeah, you're better off just buying the index." It's not like it's common wisdom, I think, out
Mm.
there that everybody knows, because from the moment you become an adult, or even before then, everyone's always saying most investing analysts or financial planners or advisors or whatever don't know what they're doing. So don't when it comes to investing advice, don't listen to any of them. They're all sharks and scam. Well, most of them are sharks and
Well,
scammers.
I don't think they are. I think there are financial advisors out there who honestly believe that they're doing the right thing, and to a certain extent they are. But unless the financial advisor you're taking advice from is obviously better off than you are, why would you listen to them?
Because they're professionals. I go to a doctor. We just assume that people with a certificate on a wall know more than we do, and therefore we should listen
Yeah.
to them, I think.
Yeah. And I think that's the case with doctors. I've got, you know, very little skepticism about doctors. I think there are conflicts in that industry, but anyway. But yeah, I mean, it's a different sort of training that a financial analyst has, and
Mm,
it'll take them a lifetime before they can work out whether what they're advising bears fruit or not. And it takes you a lifetime to work it out too.
mm,
So unless you're taking advice from someone who's been there and done that,
mm,
and I know there are financial analysts out there who've got grey hair, and they're probably the best ones to go to,
mm-hmm,
and the ones who charge you a fee for service rather than a commission on the
mm-hmm,
portfolio,
mm,
they're the ones to go to.
mm,
Yeah, but they're in the minority, unfortunately.
mm. Well, speaking of numbers and analysis, after our show last week, I did some further analysis on some of my portfolios. And I looked at the 221, the light 221 trades for calendar year 24, and had a look at why the cells were the cells. And most of it was Rule 1. And most of them were, I think, within sort of the Rule 1 margin of error by the time something becomes a 10%. There was one ING that collapsed 20% in an hour, so we took a big hit on that. But I did some analysis then looking at the current prices of the ones that we Rule 1 to see if they'd gone up or down since we sold them. Couple of them, SGI and GTN, had done very well since I Rule 1 them, and would have made a difference to the end of year results if I'd held on to them. But they were the only ones that really had turned around since we Rule 1 them and did particularly well. I also did a Rule 1 analysis on the dummy portfolio and looked at Rule 1 cells over the last 2 years, and then looked at where the share prices of those stocks are today, despite my ex-girlfriend rule. And it was exactly 50-50 for how many went up versus how many went down since we
Mm.
Rule 1 them, and VUK, which had been delisted. Now, that doesn't account for dividends that we would have accrued if we'd held on to the ones that have, well, to all of them, I guess. Even the ones that went down, if we'd held on to them, we would have got dividends from some of them. But interestingly, I was thinking about it in terms of if the Rule 1 cutoff had been increased from 10% to 20%,
Yep.
60% of the ones that I Rule 1 to 10% would have also broken through the 20% mark, would have
Mhm.
had to sell them anyway. So I don't know. That's where I got to. Do you have any analysis or thoughts on any of that?
I do, and it's a bit of it reminds me of the work that the analyst did for us, Ryan did for me, with a much bigger data set. And we got to the same conclusion that rule one of 10% and rule one of 20% were about the same in terms of their results. However, rule one of 20% meant less trading. So
Hmm.
I think that probably suits me at least better. But what we didn't do is to see what would happen if we eliminated rule one completely. We never got around to doing that bit of work. So that's worth looking at, I think, for further analysis. Because it looked like from the figures you shared with me, which I think was the 221 portfolio for QAV Lite, going through all of I think you sent me all of the sales. And if I look at them line by line, it looks like the 3PTL sales worked in terms of the shares are still less than what they were when they were sold, whereas it's a mixed bag for Rule 1. So the other question I've got is if we take out Rule 1 and just use 3PTL, how does the performance go? And I haven't done the
Interesting.
analysis on that.
Mm. So if I go back and look at it and I just assume that we didn't use Rule 1 cells,
Hmm.
I'd have to do some regression testing on
Yeah.
3PTL and commodities then, you know.
Yeah, it's a difficult piece of work, which is why we didn't get around to doing it.
Yeah. Mm,
Yeah.
mm.
Um,
Yeah.
so, so Ryan put together that we've got the buy list databases now. So each week you put it into a bigger spreadsheet, so you can
Hmm.
work through it reasonably easily.
Mm.
But it's still very manual to check for commodities and check for 3PTL cells.
Mm. Mm. Yeah, well, AI will give us some
Yeah.
more tools to do that probably in the next year. But right now, out of that analysis, I don't know what to take out of it. Like as you say, and I have implemented now a 20% rule one on half of my portfolios,
Yep.
um, just to see what happens. But based on this, I think it'll just mean less trading, maybe some more dividends. But the flip side is the ones that go down to 20% are going to go down more.
Yeah. So you said 60% became rule one at 20%. So you're kind of
Mm.
losing, you're keeping half and losing half roughly, but they're 10% worse off. So again, it's like a zero sum game really as to whether you use 10% or
depending
20%.
on depending on how much the dividends end up being worth, but
Yeah, but
get a lot from
if you sell
maintenance.
something and buy something, you still get dividends from a new purchase. So I'm not sure
That's true.
dividends are going to
Yeah.
play a big part in the
Yeah.
analysis.
No. No. Yeah. You're
Mm.
right. Yeah. Oh.
Yeah, so that's where I've gotten to. So I'm using 20% and it's working fine for me.
Right.
Um, I think I went through it a couple of weeks ago with you. I've only traded once or twice during the year,
Yeah.
which is good.
Well, some other news items I've got.
Sorry, before we leave that, you also had a
Mhm.
question on why the different light portfolios performed differently last year.
Mhm.
So don't think you sent those through to me, but if you want to at some stage, I'll try and weed through that and see if I can find a reason.
Oh, right. Yeah, I haven't done all of the analysis on all of the portfolios
Okay.
yet, but I can send you through the transaction lists and we can have a look through.
Yeah. Okay.
What should I be looking for, like in my analysis on those? Is there something in particular?
I don't know. I'm interested in what the starting portfolios hold and why they're different, why some underperformed and some didn't. Um, Number of stocks, what they'd done the year before, perhaps even too.
Hmm.
Yeah, I don't know. It's got to be in
Mm.
the starting portfolio. My thinking is that if a portfolio had a good year the year before, it's going to have a bad year or potentially have a bad year the following year.
Hmm.
But the system should still even that out. So I'm really not sure.
Mm. Okay. Well, I'll send that through and you can have a look when you get a chance, when you've got your boxes sorted out. Um,
Yeah. And I'll just so you know, I'll be away next week as well, so I can't record. I'll be in
yep,
Tassie.
I do know that. I'm going to put
So
out the
whatever you,
Muscatello chat.
okay, thanks.
Hmm.
So whatever you send through, I'll be able to get to next week anyway.
Sure.
Yep.
Well, somebody pointed out on our Facebook group yesterday that the chief financial officer for NRW Holdings, or NWH is their code, had suddenly resigned, Mr. Richard Simons. He had tendered his resignation from the company, NRW, will undertake a search process for a new CFO and will provide an update on the recruitment process in due course. I took that as a red flag and dumped the stock. It was already down 10% when I got the news. I haven't looked to see what happened today. I exited. It was in one of the light portfolios. Exited it. Well, I think it was still 28% up. So it did okay for us, but that did sound like a sudden resignation. And for whatever reason, the market didn't like it, unless they were all just QAV members who said, "Oh, red flag, and we got to sell." Did you take away anything contrary from that news?
No, it was a hard one for me because I didn't hear about it until you told me this morning, and I went researching it. And certainly the numbers they produced in their latest results look good. It's been on the buy list for a long time. But yeah, it was sold off by 10% when the market got a hold of that announcement. So I think you've done the right thing. There was a 50-50 for me because, like I said, the numbers are good. Company's doing well, but the CFO resigned. So it's, in the absence of further information, it's hard to know, but the market sort of made its mind up. The other interesting point was it's a long way above its sell price. So if you waited for 3 PTL sell lines, which is the other trigger, you might have given back that 28% that the portfolio had made. So I think you've done the right thing. I think on the balance of the risks involved, look, it might rebound, but wise stay in it if it keeps going down.
And the press release that the company came out with didn't say family reasons, health reasons, he's taken another job. There was no justification for it, just he's out. So it didn't smell great. So
yeah, look, it could be innocuous. My first thought was he'd been poached. I went back and looked at his bio. He was CFO at Clough, another engineering services company, for a long time. So he's had a good track record. He was brought into NWH by the retiring CFO, who used to be his boss at Clough. So he was a known commodity. So it's entirely possible that he's been poached by someone else. I couldn't find out who, but yeah. A couple of other interesting side points. I don't know if it's important or not, but that company has had another REM strike. So more than 25% of the shareholders voted against the remuneration report, which is mentally to a spill on the board. But this company actually has had the longest streak of REM strikes of any other ASX stock. It's now into its 6th year of shareholders voting against the remuneration report. So I don't think that's triggered the CFO's resignation, because it was happening when he was hired 2 years ago. So, but yeah, clearly some portion of the shareholders are unhappy with everything. And one of the directors, Fiona Murdoch, also had a 25% protest vote against her, even though she was re-elected. So not sure what's going on. I don't know the company that well, but I think in the absence of information of downturn in the stock on the announcement, I think you've done the right thing.
I just looked, it hasn't recovered today. So, it hasn't gone down further either, but it's just sort of stabilized down.
Yeah.
Well,
yeah, we don't need to take the risk, and we can always buy back into it if it stays on the buy list. And it's currently a Josephine, so you won't touch it for a while. But yeah, it could bounce back.
Well, speaking of disappointments,
one of your
Myer, one of my old favorites, Myer. Always the same old story with Myer. It goes up and then it comes back down. Disappointing trading updates from Myer saw it drop 22.27% yesterday, and then it's dropped a little bit more today by the looks of it.
Yep.
Myer Holdings provided the group comparable sales were in line with the PCP, previous corresponding period, while total sales were down 0.8% on PCP. I don't know what the difference between group comparable sales and total sales are. Put your retail hat on there for me.
All I can think of is I haven't heard the term. I'm guessing it's like for like, so it's normally called like for like. So the stores that were open at the start of the period
Ah, right.
get compared, not any new stores or closures.
Total sales were affected by the temporary closure of the Werribee store between the 14th of February 2024 and 29th of November 2024. Group online sales were up 2.8% on PCP and represented 22% of total sales in the period. Operating gross profit was 560 mil, representing a decrease of 15 mil on PCP, while EBIT on a pre-AASB 16 basis, well, I'm glad it's a pre-AASB 16. I never like it when they do a post-AASB
Yeah.
16. That always really gets my nerves, was 48 mil, a decrease of 16 mil on PCP. Anyway, Myer collapsed. What are you going to do? It didn't become a sell for us. We're still up on it, but it's a long way down from where it was.
Well, again, I tried to put I don't know, Mo, I tried to put myself in the shoes of someone who would, and I think it's probably a similar sort of thing. Why take the risk of it going down further? Um, I note it's a week away from the shareholder vote to merge Myer with some of the Premier brands and bring Solomon Lew onto the board, which I think is a positive. The Solomon Lew on the board. I'm not sure if the merger with the brands is being seen as a positive by the market at the moment, because I think I tried to crunch the numbers myself, didn't have enough time or, to be honest, interest, willpower to do it. But the brands which are coming across from Premier Investments into Myer, so the merger going on, that's being voted on soon, which are basically the Premier Investments store brands, so Just Jeans, Portmans, etc., all the ones which involved in fashion, had I think a worse deterioration over the Christmas period. I don't have the numbers in front of me, but they were down a lot as well. And in particular, their margins decreased. And I remember reading an article when the merger was positioned, saying that it was a good deal. Well, I think the independent valuer that was appointed by the Myer board said it's a good deal because the margins at the Premier investment brands like JJ's and Just Jeans and Portman's is higher than the ones in Myer. So I'm suspecting that the margin deterioration at Premier Investments has soured that reason for merging. But I haven't had a chance to go through and crunch the numbers on, because it's very convoluted on how many shares are being issued and at what price and what my shareholders get out of all this. There's lots of moving parts. But I suspect some of the big banks have, and they're saying, oh, it was a good deal before and may not be now. So, but, I haven't crunched the numbers. It's looking like, I mean, the numbers that were released by Myer aren't, they're not great, but they're not the kind of numbers I would expect to see a 30% downturn in the share price after. So, in summary, it looked like the sales were flat year on year. Okay, so no growth. So that might send some people to the sell button. But Myer is a low growth business. I don't know what they expect out of Myer really. There's Lydia Worth, the head of Myer, had some reasons for that and why the profit was down at an EBIT level. She talked about the closure of a store. She talked about commissioning a warehouse that was taking longer and costing more. So I kind of understand why the EBIT numbers missed. Again, I wouldn't expect either of those two things to drop the share price some 30%. So I suspect people are getting cold feet with the merger with Premier, which has probably had a worse Christmas than mine did, from my sort of casual reading of the numbers.
So I hold it in two light portfolios, bought both parcels in January last year. They're both up around 30%. Share price is currently 85 cents. The 3PTL is 54 cents. So I'm up on it. I mean, you said before you think it's like the NWH one. Why risk it going further? Would you fudge a sell on something like this if you held it?
I'm probably leaning towards it at 50-50 for me. And that's one thing you could do, is sell half and keep half. Something we haven't done before or recommended before, but when you don't know. It's
Mm,
an option.
mhm.
Uh, okay, let me go through the risks. The risks are that the shares keep dropping and they go down to the 3 point sell line, which forces us to sell. And that's a big loss. I suspect you might be rule one along the way for the positions you have in the light portfolio. So,
Rule
but
one
even
is only
so,
like
it's
50, 59 cents. The 3PTL is 54. So it's
not
not,
much difference. Yeah,
not
okay.
much. No. Mm.
But you're giving up a 28% gain. So the question is, um, what's the upside from here? Mire's not going to recover in a heartbeat. They've got not a messy merger. They've got a merger to get through. Uh, if the vote doesn't go ahead next week, um, the share price will definitely crash because I think the growth in my stock price in the last sort of 6 months has been on the back of the announced merger.
Right.
So yeah, I'm leaning towards a sell as a red flag.
Mm.
Again, take a profit, bench it. If it comes back on the buy list and it's not a Josephine, you can always buy back in.
Take a profit. I don't think I've ever heard those words come out of your mouth, TK.
Haven't you heard that saying? You never go broke taking a profit.
Not out of your mouth. Okay. I'll make a note. Um, on the positive side, GNPs, Genus Plus, which
Mhm.
is a stock on our buy list, they had an announcement in the last day or so that they got a $270 million clean energy project contract with Western Australia. Stock got a nice little bump, jumped from around about $2.50 up to $2.66. It's come back a little bit since then, but if anyone owns that, you might want to know. That's been good for them.
Mhm.
And I also noticed today that FSF, which is a company that's also on our buy list, FSF Management Company, Fonterra Shareholders
Ah, right.
Fund, has submitted a formal application for removal from the ASX
Mm.
pursuant to ASX listing rule 17.11. Don't know what that is, but
Well, it's
they're
like
going to.
it's a delisting, so I suspect that's a really important piece of news for anyone holding the shares
Right.
on the ASX because I would guess they'll then be converted to New Zealand shares because Fonterra is the big milk co-op in New Zealand, one of the biggest companies.
Yeah, that was the rest of the announcement that they're going to just be listed on the New Zealand Stock Exchange.
Yeah, so
So,
that might not, people might want to do that. Apart from the currency issues and the tax issues, and there'll be different listing rules, etc.
yeah,
May cost them a bit more to transact, so they might want to get out now before it delists.
yeah. Don't hold them in any of our portfolios, but just an FYI for people who
Yeah.
do.
Hmm. Good pickup. Was that an AI
Thank you.
pickup? Is
It
that your
was an
use or
AI
word?
pickup. Yeah.
Right.
Yeah, yeah. Got some
Good.
problems with my AI news script that I've sort of spent the last week kind of trying to fix up. Um, and yeah, still got some issues, but picked that one up.
Hey, just on that, are you able to amend your news alerts to pick up buybacks or buyback announcements at all?
Yeah, if they're reported in the media, yeah,
On the media, okay. They're definitely reported as an ASX announcement.
yeah.
And they're
Well,
often headed, shares bought back today or whatever, or daily announcement of share buybacks. And the other reason I'm saying it is that I've been looking at trying to find a source myself to automate because it was one of the things, one of the chapters in what works on Wall Street I've been trying to incorporate into the buy list. But I haven't found an easy way to decide without manually checking the stock.
yeah, I can play around with that. See, the system that I've built is using Google News alerts
Mhm.
to file through. So if they're getting picked up by Google News alerts for some reason, I can pick them up.
Okay.
I don't know how whether or not the ASX announcements are getting picked up with that, but I suspect
Okay.
they're not. But I'll have a look.
Yeah, thanks.
The only other thing I had talking point wise, Tony, is this article I saw this morning in Macro Business. Australia's private sector economy stuck in recession. Following the Q3 national accounts release last month, Pradeep Philip, head of Deloitte Access Economics, noted that the private sector was being clobbered and the economy was stuck in the mud and spinning its wheels. Ines Wilcox, CEO of the Australian Industry Group, shared a similar opinion, pointing out that the private sector is in recession and losing jobs. The data shows much of the private sector faces recession-like conditions. It is only a flood of government spending in recent months that is masking the true picture in the broader economy, Wilcox said. It is clear the non-government sector of the economy, the private sector, is in contraction, and you could then argue it is in recession. There is a big transfer between the private sector and the public sector at the moment. The private sector is shedding jobs to the public sector, which is picking up jobs. But are they the productive jobs we want? The real problem we have here for the economy is that the private sector, which is the engine room of the economy, is slowing quite dramatically, he said. And I saw another chart recently on Reddit, I think, talking about the number of insolvencies in Australia that are going through the roof, particularly in the construction industry, which we know has been coming some time, but a lot of other industries as well. Insolvency rates are very, very high right now. What does that mean for our investing strategy in the next year, Tony?
Oh, sweet FA. It'd be good if we had an insolvency company on the buy list.
And there's the title for this week's episode, Sweet FA.
I know one of my acquaintances from one of the golf trips isn't available for a lunch, and he's an insolvency partner.
Right.
And he told me when we were overseas playing golf that all of his mates were going out and buying new Porsches. So, it's not new news that there are lots of insolvencies. And I'm making light of it, obviously a terrible time for businesses that are going into insolvency. I read your article and I made a note and I just had one word: propaganda. I'm not saying it's incorrect that the private sector is doing it tougher than the public sector, but it's a very one-sided article. I mean, Ines Wilcox is paid to push the pro-business side of lobbying. And
sure.
My response to him would be to pull your finger out and get your productivity up and pay your workers more. And you might stop losing him to the public service. And in some respects, it's the role of government sometimes to fill the gap in the economy when we're going into a downturn, or it's going into a downturn. But if you look at graphs of productivity, the Australian private sector has done sweet FA again for the last 10 years about improving productivity, and they'll argue it's because of government red tape and blah-de-blah-de-blah. But, we've been through a mining boom. Our banks are booming. Plenty of stuff to invest in on the buy list. It's an old trick to point to the government side of things and say, you're just taking workers away from us and we're not paying them enough, or he'll be out there arguing that we shouldn't have any more immigration. But, that's where the labour comes from sometimes in the economy. So, nothing against Ines Wilcox and nothing against the BCA, but I try and, balance what they're saying against someone from the other side as well. I think he's probably right that, private sector's doing it tough and the workers are going to the government. But, that's the problem. How's he going to fix it is my response to it.
Right. Okay. And from an investing perspective, as always, doesn't really matter what happens in the economy. We just keep doing what we're doing.
Correct. Look, I'm reading more and more articles than ever before about how overvalued the US share market is, about how overvalued the banks are in Australia, et cetera, et cetera. So it would not surprise me if there's a correction in share markets. But we have rules to work through that. Wouldn't surprise me if Donald Trump and Elon Musk go on I'm getting the names confused.
Donald Trusk.
Trusk, yeah, go on a tear and the share market loves it. So who knows? Again, it's prediction.
Mm. All right. Well, that's all I've got for news. Tony, do you want to get into your Horizon Oil pork?
I do. Yeah, it was a really interesting one. I decided to do it today because it's an oil company and the oil price has turned up. And there's a number of shares on the buy list which have been there almost as long as we've been doing QAV, or if they haven't been there the whole time, they've gone on and off the buy list a lot. And I know I did a pulled pork on Horizon. I couldn't find out exactly when, but I suspect it was in the very early stages of QAV. So I'm happy to revisit it now. And it was a very interesting one. It was a bit of an eye-opener for me. So I was glad I jumped back in and had a look at it. So if anyone doesn't know who Horizon Oil are, I'll quote from their website. They're obviously an oil company. They drill and explore and sell petroleum products. To quote them, we have a low-cost conventional oil production from joint venture interests in, I'm going to go through how they name things, Block 22-12, which is in offshore China, and Horizon's partners are CNOOC, CNOOC Limited, Fosun International Limited, which is via Rock Oil, another Australian company, and Oil Australia Limited. That's one of their areas that they work in. So all these names relate to oil fields. So Block 2212 is off the coast of China. PMP 36180, which is also called the Mari Manaya fields, which are offshore New Zealand. And Horizon's partners in that are OMV and Q Energy Resources. And both Rock Oil and Q Energy will be familiar with investors. They're listed on the ASX. And the last one that Horizons call out is OL4 and OL5, otherwise known as Mereenie in the Northern Territory, Australia. And in that case, their partners are Echelon Mereenie, Central Petroleum Mereenie, and Q Energy. In both of Horizon's non-operated oil projects, Block 2212 and PMP 36180, Horizon has been a long-term partner, over 20 years in China and 17 years in New Zealand, and was a participant prior to and throughout the project appraisal and development phases, including the 2022 Block 2212-12-8E development. So basically, their expertise is in finding and bringing oil fields to production. I wouldn't think they have the capital to do it themselves, so they partner with other people, and then sometimes they step back and let other people do the actual drilling for the oil and selling for the oil, and they keep a stake. So that's what they do. 2024 results were down on prior years. So revenue was 111 million US versus 152 million. Profit after tax was 26 US million versus 44 million in the prior year. However, FY23 appears to be an outlier with much bigger revenues than trend. And management called out that FY24 was 7% above the 5-year average trend. And if you look at a graph, the prior year was quite good, but otherwise they'd be chugging along on an increasing trend, but not quite as good as FY23. One thing that has happened between when I last looked at this company, I think, and now is a scandal engulfed the company in 2020. And I'll call it the PNG scandal, and I'll be circumspect about what I talk about because the parties in the matter have been litigious, and I think there may still be some actions going on, so I'll be careful. Anyone interested in the details can go online and read articles in the Fin Review and other places, and also the company's responses to them. But using the company's own announcements, the timeline goes like this. On February the 10th, 2020, the AFR published an article suggesting that Horizon may have been involved in the bribery of a PNG energy minister. The claim relates to the granting of an exploration license back in 2009 and subsequent company transactions between the business granted the exploration license. At the time, the Horizon board suspended the then CEO and commenced an investigation by external law firm Herbert Smith Freehills and accounting firm Deloitte. This was announced to the market on the 12th of February 2020, so 2 days after the Fin Review first broke the story. The Horizon CEO then resigned on the 28th of February, and they appointed an internally sourced acting CEO. On the 9th of June 2020, the Horizon board announced the independent investigation concluded and found no breach of foreign bribery law. On the 25th of June, the board announced the interim CEO would become the full-time CEO. So that's a précis of what's happened. People can read about it online. I'm not going to talk about it publicly, and just in case I say the wrong thing. I will say, to my knowledge and research today, no charges were ever brought against the company over the matter. So if there was, well, the allegations haven't been proven in a court of law, I guess is where I'm coming from. The company share price closed at 13 cents on the 31st of January 2020. And then when the story broke, it dropped to 8 cents during February. So quite a drop. But proving a good time to buy, because it's since then it's rebounded and the price today is 19.5 cents. It's hard for me to know whether that was in response to the bribery allegations article or COVID, because COVID was also occurring around then. And if people remember, the oil price was smashed. It got down to about $45 a barrel at the time. So I would have thought this is one of the companies that was on life support during that period. So the share price may have been hit by COVID as well. The Horizon board thought 8 cents was too cheap and began a buyback of their shares. And that went through for 12 months up until a fund called Samuel Terry bought a 19.9% stake in June 2021 when the price was still only 9 cents. On the same day, a company called Australasia Energy sold down its stake from 30.26% to 25.34%. So a bit of corporate action going on when the price was still depressed, and probably coming out of COVID as well. I went looking to see what Australasia Energy does, and I couldn't find a website for them, even though there's listings for a website for them that just goes through to a file not found error or a site not found error. The only information I could find on them was from a site called Zoom Info, who I've never used before, but they say Australasia Energy has more than 33 years of industry experience and has developed close working relationships with major oil and gas producers, major energy consumers, government officials, and policymakers, etc., etc. They work with BHP and various other big companies in the oil and gas sector. However, I also saw listed on Stock Doctor that the Austral Energy ownership is the same as ones which Stock Doctor lists as owned by US funds IMC Investments, and they own 24.68%. So I went to the annual report, and it actually says that these two are working as partners. So I suspect that you can interchange both of them. I looked up who IMC Investments are. They make the boast that they are a global trading, powered by quant research and tech company. From Amsterdam to Chicago, Sydney to Mumbai, IMC is where the brightest minds in quant research, tech and trading come together to solve our industry's most challenging problems. We hire the most exceptional people, then unleash their potential by giving them access to disruptive, cutting-edge technology, including AI, machine learning, and large-scale computing. Well, they could have just used QAV to go and see how good Horizon Energy was at the time. So I think my reading of this is Austral Energy and IMC are interchangeable as the fund. Either way, they own nearly 25% of the company, and Terry Funds owns, I think they're now sitting on about 21%. So between them, they own almost half of the company. In November 2021, in the AGM address, the acting CEO, who was made the full-time CEO, kicked off his presentation with the very first slide, which says, "Our strategy is simple. Firstly, we seek to maximize free cash flow. Secondly, we intend to make further distributions to shareholders when it is prudent to do so. And thirdly, we will consider to invest in new business if exceptional. So I suspect there's a bit of an influence of the new fund managers who control the company behind that strategy. It's basically a maximizing cash flow strategy. And it reminded me of the company we spoke a couple of weeks ago, the Traffic News Network company, where a fund manager took over and said that he wanted to make sure the company was aligned with shareholder interests. Going on from that, and I like that. We're interested in cash flow as an investor. I think it's great. In the first half 22 results, the focus on cash flow was underlined. Cash flow from operating activities increased 150%, replenishing cash flow following capital returns. So that was interesting and made me think about why they had to replenish their cash flow or their cash from capital returns. And I looked at it and found out there was capital returns made in June 2021 at the time that the fund manager, Samuel Terry, I think they were called, bought into the company, and also in June 2022. And both of those returns totaled 3.35 cents per share. And that was on top of dividends of 1.65 cents per share. So in the 12 months after this fund bought in, they got 5 cents per share returned to them. And they bought in between 8 and 9 cents. So that was not a bad return for them. Kind of operating or cash flow return of 1 or 2 maybe. So by 2024, I worked out, April 2024, Samuel Terry had repaid its initial purchase price and distributions from the company, at least on a pre-tax basis. I know capital returns are taxable and dividends are taxable, etc. But in the following shareholder presentations, maximizing cash flow has always been listed as the top priority. The company has kind of shifted, not just to maximize cash, but also they didn't undertake drilling programs for a while. And the company has a long history of drilling and finding good areas to productionize and then partnering with people to bring those areas to fruition. But they did start drilling programs from 2022. So they understand they need to keep their future reserves up because they will run dry otherwise. But obviously doing that within a cash flow mindset, I guess, has been good for them. Horizon replaced the CEO in 2022 and also a large part of the new management team. And also last year refreshed the board. So the announcement in 2024 was Horizon chairman to retire, board to refresh. So after almost 6 years as Horizon's chairman, Mike Harding has advised the board of his intention to retire at the conclusion of the upcoming 2024 Horizon AGM, which was the last AGM. It is with mixed emotions that I announce my intended retirement from the Horizon board at the upcoming AGM. Horizon is a company I've grown very fond of, having taken on the role at a time when the company was deeply indebted and facing severe strategic headwinds, which had eroded shareholder value. He goes on to talk about turning the company around, which was fantastic. And there was another comment which I wanted to just highlight. I'll just see if I can find the actual quote. Anyway, I can't find it. They talk about the company becoming a can't see it. They're talking about the company becoming a like a cash generating oil production company, which is a bit of a different sort of spin on their prior mission statements. So over the course of a couple of years, they've cleaned up the bribery scandal, alleged bribery scandal. They've become a cash flow focused company with disciplined exploration. And it all has the hallmarks of these two funds setting about to change the way the company operates. And the share price has recovered from 88 cents to nearly 20 cents. So it's worked well for them, and it is working well for them. What else can I say? So that's pretty much where they are. It does remind me of that Australian Traffic News company we spoke about, where a fund takes control and then positions the company for shareholders rather than anybody else, other stakeholders like management. QAV numbers. So put all that aside, that's background. ADT is $178,000. So it's not a large company, but it's suitable for people with a portfolio of around, say, 500,000 or less. The share price for analysis is 19.5 cents per share. There is no consensus target for this stock, which is something I like, and no forecast earnings per share, so I can't do an IV2 calculation for it. IV1, however, is only 13 cents, which is below the share price, so we can't score it for that. Current yield I found interesting. This company is really being milked for the shareholders. Current yield is 15.38%. So that scores well for us, which is very strong, but the payout ratio is high. And Stock Doctor report a payout ratio of 116%, meaning that the dividends are being paid out of cash reserves, not just current profits. So, my analysis of that is that if the future results are not materially better, the dividend would need to be cut. So just be aware of that if you require that kind of level of dividend. This is one of those companies which I like, where the yield is greater than the PE ratio. That's a strong value signal for me, and we score it additionally for that. Stock Doctor financial health is strong, and the trend is steady. Stockopedia quality ranking is 80, which is not all that high. The F score is 4 out of 9, which again is just below par for that. If drilling down into the F score highlights some of the risks mentioned above. Profit this year is lower than the prior year, and there has been some increase in debt. That didn't trouble me because the company's got lots of cash to service debt, so I'm not too worried about that, but it does lower the F score. Stockopedia quality ranking is 80, but value is 95 and overall is 96, which is quite high. So I think Stockopedia rank it pretty well as well. We don't score based on ROE, but it did strike me as quite high. ROE for this company is 31%. That's the return on equity. So that's very good. PE ratio is 7.6 times, which is low. It's not the lowest, though, or the highest, but it's the second highest. And the highest was 3 years ago. So unless the PE sort of stabilizes, next half it may become the highest and it won't receive a score for it. We're not scoring it now, but it may get a negative one in the future. What's really driving my liking of this company is the prop cap, which is 3.27 times, which is very low. So it is throwing off lots of cash. And so bang like a drum, but it's something I like to see in companies. Net equity per share is 8 cents per share, so it's well below the share price. We can't buy it on the basis of its assets. We're buying a cash-producing machine instead. Interestingly enough, two funds hold the majority of, or nearly the majority of stock between them, in the sort of mid-40 percentages. But I can only see one with a director on the board who's, I imagine, driving this move towards cash flow. So it was a tricky one to score as an owner-founder. Strictly speaking, it's not. However, clearly the company is being run for the benefit of the shareholders, so I'm going to leave it as scoring a 1 for owner-founder. It seems to be well stewarded by the shareholders, by the large funds involved, but not an owner-founder. What else can I say about it? Company share price has been increasing kind of steadily since 2020, so it doesn't score as a recent 3-point trendline buy. It's been a buy for a long time. It doesn't have increasing equity, so we can't score it for that. But overall, it's a 10 out of 12 for quality, which is 83%, which is very good, and a QAV score of 0.25, which is at the top of the buy list. So it scores well from our perspective. Now that oil is now a buy, it can be bought with some confidence anyway, or looked at. I'm not suggesting people run out and buy it, but have a look at it. There are some risks, of course. The high concentration of ownership in two funds so far seems to be very good for the company, but I always wonder if push comes to shove, the small investors' interests may not be top of mind for the other fund owners. The other risk is the high dividend payout ratio. That's going to have to resolve itself. It can't go on forever, which is probably going to mean a cut to the dividend payout. But it's got to be careful of companies like that. The other thing which I found interesting was that the company is only producing, or its share of the production is $111 million US in revenue. So it's a fairly small company, and it will have to fund large capex at some stage to keep exploring. They seem to have a disciplined methodology for that in exploring around their current tenements. So they're trying to minimize the cost of doing that. But $111 million of revenue is not a lot. And I'm often a little bit wary of small revenue companies because in bad times there's not much meat on the bone to have in reserve. But at the moment, it's doing well. The last risk is, of course, the oil price. It's moved to a buy, and as we said before, there may be a glut coming up into the market if Ukraine gets sorted out, or if drill baby drill happens as expected, or any number of other geopolitical events and risks occur in the next few years, which will affect the oil price. And as we know from our experience, it happens reasonably commonly, sort of once or twice a year, perhaps. On the positive side, this company, even though it only had $111 million in revenue, produced $39 million in profit before tax. So it's highly profitable. So even though I said before it doesn't have many reserves, it's got a big fat profit margin to play with if there's a problem. And that to me says it's also leveraged to the oil price. So it's a bit like one of these gold mines where the costs are fixed, and when the gold price goes up, the margin improves. I suspect that's probably the same with Horizon Oil. So yeah, colourful company, interesting situation, being managed for cash flow, which I like. So yeah, have a look at it, people.
Thank you, Tony. And I added some to one of the live portfolios yesterday just for transparency. All right. Oh, by the way, I checked my AI news script. It is picking up buybacks already.
Oh, good.
But it's rating them lowly in terms of my prioritization of where to rank stories. So I can increase that up if you want heads up on those. And it's getting them from Hot Copper, because Hot Copper runs the ASX news alerts.
Really?
Yeah. So it's Hot Copper picks them up from the ASX. I'm picking them up from Hot Copper.
Okay. Yeah. Yeah. Look, it'd be, if you could stream it off for me, let's have a look at the data it produces. I'm thinking about putting it into a score on the buy list. So, because of the good work, the good research that O'Shaughnessy did and what works on Wall Street. And I haven't done the analysis yet, but it seems like companies like Horizon Oil, Qantas comes to mind, when they're conducting buybacks, they tend to go up. Fleet Partners was doing a buyback and was going up. So I think there's enough evidence to put it in the buy list and see what we can do.
So my only caveat on that is I only have alerts set up for companies that are or have been on our buy list.
Right.
Is that okay?
Oh, I think we start with that.
Yeah, okay.
Yeah. My sense would be if you think about the filter list, so the companies that get downloaded and then scored into the buy list, if we add another item to the buy list, it might filter some of those companies into contention.
Mm-hmm.
So it'd be great if we could widen it to that list, which is wider than the buy list. But if we start with the buy list and have a look, let's see what we find.
Yeah, well, I can do that. It just means I need to add a couple of hundred more alerts, but I've got that all coded now, so that's not really a problem.
Okay, thanks.
All right. Well, I think that's that. We're into after hours.
Ooh.
What have you got for me this week? Yeah.
Yeah, well, Civil War was a movie Jenny and I watched.
Not the Captain America film.
No Winter Soldiers in this one.
Mm-hmm.
But by Alex Garland, who I had to look up because I recognised the name but forgot what he did. And he made a movie which I like called Deus Ex Machina. Which
that was a great film.
Really good, yeah.
Yeah.
So he made this. It's how can I describe it? It's almost like every other sort of war film I've seen, like Vietnam War type movie. It's about journalists who are in a war situation, so they face danger and risk and living out of their car, and they travel across America. The premise of the story is told but not fleshed out. So apparently, it's kind of like you come into the whole thing late. The war's almost finished, but the Western forces, which is California and Texas, have joined up to take on the rest of the US. And there's a I don't know if it's meant to be Donald Trump, but there's a pompous ass in the White House who keeps making broadcasts saying how wonderful the war's going for them, and it
Played
doesn't
by
end
Nick
well.
Offerman.
Yeah, doesn't end well for him. Spoiler alert,
Spoiler.
but you can
Yeah.
see it coming the whole way. Anyway, so I really enjoyed it. It's this kind of smallish movie. Like there are some great special effects in it and great war scenes in it, but it's like almost like it's not like handheld camera, but it's almost like you're following these four reporters as they have to they start in New York. They wanted to go to Washington, D.C. to interview the president, which no one has done because the president's been executing journalists, but they decide it's worth the risk. But they can't drive straight from New York to Washington. They have to go the long way through Delaware, no, Delaware, uh, Virginia, West Virginia to get there. And, they encounter roadblocks and dangerous situations and mass graves and displaced camps and all those kinds of things. So yeah, I found it compelling. It's not a happy movie, but yeah, very
But it
well
doesn't
made. I thought
it doesn't explore how the Civil War
it
started.
doesn't. No,
Hmm.
no, you just brought in towards the end. Yeah,
Yeah, that's like I've been part of several discussions on Reddit over the last few months about how a civil war in the US might play out and how these things get started. And, I just did a show with Ray last week wrapping up the Syrian civil war series that we started the bullshit filter with 7 or 8 years ago. We did like 25 episodes on the Syrian civil war at the time, and we did one or two updates since then. And then I did a 2-hour show last week, just sort of recapping the history of the Syrian civil war up to where it is now, with effectively Al Qaeda running the country with the support of the US and Israel, putting them into power. But civil wars, there's a fairly common set of circumstances that usually start civil wars. There's only really a small number of varieties, I guess, of civil wars, and then you apply that to the conditions in the US today and say, okay, if any of these are likely, which one is most likely? So yeah. Anyway, we'll see what happens.
yeah, and the premise of California joining up with Texas I found interesting too because they're kind of
Mm,
polar opposites politically. That's sort of
yeah.
explained. Yeah,
Well, except for Austin. Depends if it comes out of Austin, I could see
yeah,
it, but
right.
anywhere else
Yeah.
in Texas, maybe not.
Hmm.
What else?
We've been watching Black Snow. Have you seen that on Stan?
I've seen it advertised, but don't know anything about it. Is it an Australian thing?
It is. It stars Travis Fimmel, um, who was in Boy Swallows Universe and I
He
think
was the
a lot of
dad.
things. Yeah,
Yeah, he's good.
yeah. I'm enjoying him, but I think he's been to the Brad Pitt school of over emotional acting because it's all about shaking your head and putting it back and shaking your hands and it's all dramatic, over emoting. I think, but anyway, that's him. And it's part of the character. He plays a cold case cop who's been sent to in the first series to it's it's never mentioned that it's Proserpine. I know from living up in that area that it's Howley Beach, Proserpine, that kind of area. And then in the second series, which is still dropping, so we're eagerly awaiting the next episode, he's sent to the Glasshouse Mountains and that area to solve a cold case.
Hmm.
Yeah, really enjoying it. It's police procedural, but the premise is he comes from a broken family and he's kind of going into broken families to try and solve these cold cases and helping them while, having all the guilt of his own lost brother and violent father and all that kind of stuff. So, but yeah, it's great to see Queensland showcased. As you were saying before, off air about watching American movies which are shot in Utah or meant to be in New York or whatever. It's the same with these like that. I think they deliberately don't name the towns because it's a mishmash of central Queensland in all of these. They just pick the best parts and put them into the scenes. But really spectacular scenery, especially in the second series where they've got the Mount Biawar and Mount Nagungan and Kibra in the backdrops. It's beautiful photography.
Dear bro.
Yeah.
Tibro.
Which I climbed a couple of times with my mate Des when I was younger. Mm.
Chrissy and I have been up Tibro a couple of
Yeah.
times. She summited it. I didn't get right to the very top.
Uh,
That last little scramble up the top there,
mm.
I'm like, yeah,
Same.
this is like 15 years ago. I'm like, yeah, I'm not doing that.
I couldn't do
And
it either.
when she was doing it, I just had this vision of her falling to her death and me having to explain to her family and back in the US how she died falling off. But she's good with the
Well, I
old
used to have
rock
visions
climbing.
of Des falling on top of me and pushing me down the back end of Timber.
Yeah, these days he'd just push you. It wouldn't be falling on top of you. He'd just give you a shove.
Oh, we had this. I remember we had this day. So I can't remember if we wagged school, might have been a holiday, but we caught the train up from Brisbane to Timbergarden, real schoolboys. And he had this ambition to climb all three in one day because there's Timbergarden, Crookneck, and Beerwah. And we did it, but he got blisters, and I kind of had to sort of half carry him back to the train station. And he missed the train, so I had to call my mum to come and get us like at about 6:30 at night. And she didn't mind, didn't say anything, but it was a bit of an effort of her coming up to the Glasshouse Mountains to pick us up. Des couldn't walk.
Oh, that's a great story. Well, what kind of high schoolers have a goal of summiting 3 mountains in a day? That's kind of unusual. Now to just be like finish a couple of Minecraft maps or
Yeah, right.
something like that. Kill
We
the
did
Ender
it. It's good
Dragon.
fun. Mm.
Well, yeah, I was telling you off air. I watched the first 2 Planet of the Apes films from
Mm.
68 and 70, I think. And the first one, really loved it. Cinematography is magnificent, even though you can tell at times that there's a backdrop. It's shot on like 70 mil.
Right.
It's this beautiful ultra wide screen. Obviously the beginning of the film, they're walking through the desert, so it's very Lawrence of Arabia-esque.
Mm.
Those beautiful golds and yellows, and very barren, beautiful to see. Story makes no sense. Like, for people that haven't seen or
That's
haven't
as much
seen a
sense
long.
as Doctor Who.
Oh well, yeah, okay, but they land on the. It's actually, I love this. The opening scene is the astronauts
Mm.
heading back to Earth from somewhere. They're all in cryo except for Charlton Heston, who's dictating his notes into his like captain's log while smoking a cigar in a rocket ship, which is quite a small rocket ship.
Mm.
Now, being a occasional cigar smoker, I had one New Year's Day with Chrissy's, like the first one I'd had in maybe 6 months. I've got one left from our 2022 trip to the US that's been sitting in the humidor ever since. But they give off a lot of smoke. I don't know. Maybe they've got
oxygen-rich environment too, probably.
Maybe they had really good venting environments, a really good vent and the thing. But anyway, he goes, we've been away, if the scientists are correct, 700 years will have passed. Then they wake up out of cryo. Something's gone horribly wrong. They've crashed. They're sinking in a lake. They have to get out. He takes a quick look at the clock, and it's, the time meter, and it says it's the year 3,900 or something. And he assumes that they've gone off course and they've crashed near Beetlejuice or somewhere like that. Not Michael Keaton's Beetlejuice, but another the actual star.
And it just happens to have a lake.
Happens to have a lake, and it's quite obviously Utah. I was like, well, why is he going, holy shit, we landed in Utah. This planet looks like Utah. Hey, Chrissy goes, well, back in the 60s, people didn't get out and see as much. I go, yeah, but he's seen a John Ford Western.
Yeah.
They've all been shot in, Monument Valley and places like that. You go, oh, this looks like a John Ford. Anyway, still doesn't twig, then gets captured by the apes, who all speak English with an American accent. And when he writes in English, because he's damaged his throat, he gets shot in the throat, he can't speak, they can understand his writing, still doesn't twig that he's on Earth. Like that, never sees humans, doesn't twig that he's on Earth. Not until he sees the Statue of Liberty at the very end that he goes, "God damn you all! It was here all along." Like, come
Yeah.
on, dude. For a bloody astronaut, you're a little bit slow on the uptake. But I like the fact, like, his performance is over the top, but he's very sort of misanthropic, hates
Mhm.
humans. That's why he became an astronaut, because he hated
Mm.
humanity. Like, I don't know about NASA's criterion for being an astronaut in the late 60s, but pretty sure if you hate people, you don't get through the selection process to be
Yeah.
trapped on a rocket ship with people for
Yeah.
several years.
Well, yeah,
Anywho,
he's not a team player, and I think from memory, I think, but doesn't one guy not make it out of the spacecraft and gets drowned in the lake, and the other guy gets captured by the
no,
monkeys and
there's
separated off?
three guys and a woman
Yeah.
who they were going to all use to procreate with. He tells somebody later on when they arrived at whatever planet they were supposed to be arriving to, but we don't know why they didn't arrive, because they were heading back to Earth or whatever. Or maybe yeah, whatever. But they
What?
she
Okay. I always thought they landed on the planet they were heading to.
well, it could be that, yeah. Maybe he just said that 700 years had passed,
Yeah.
but they weren't returning back to Earth. Maybe I misunderstood that at the beginning. But her when they crash, they check her cryo tube, and she's looks like she's a mummy. So it had gone wrong. The three guys escape, and then one gets killed by the apes, one gets lobotomized by the apes, and he's the last one standing. But then later on, he decides he's going to be the protector of humanity, and he's going to fight for the humans, and something, something, something. Anyway,
He hates apes.
it's
He hates apes worse than he hates humanity.
yeah, the dirty apes. Yeah, yeah, yeah.
Get your paws off me, you damn dirty ape.
But the second film, Beneath the Planet of the Apes, just like he's a small part of that one. It's got another main character, it's another human astronaut who followed his trajectory, happened to land almost exactly where he did in Utah. And then the mute human that Charlton Heston had rides off into the sunset with, Nova, had been separated from him and stumbles across the new human who looks a lot like a younger Charlton Heston, and happens to be wearing his dog tags. So the other guy knows that she knows him anyway. And then this psychic, spiritual, metaphysical stuff it's all very, and they're worshipping, there's this underground human cult that worship an atom bomb that has somehow survived 2,000 years, and they're going to detonate it with crystals that they seem to have got from Christopher Reeve's Fortress of Solitude.
Very
It's
60s.
yeah, very, very trippy sort of a thing.
I gotta say, Charlton Heston made some great sci-fi movies back then.
The Omega Man, was that one of his?
Yeah, I think that's the worst of the ones he made, but Soil and Green, that's a cracker of a movie.
Haven't seen that since I was a
Mm.
kid. Yeah, I remember liking it as a kid though.
Mm. And then Planet of the Apes was also great too, I thought.
Yeah, so it held up really well.
Yeah,
Then he joined
yeah,
the NSA. He went from
NRA.
he went from, oh yeah, that's right, not as NRA, from NASA to the NRA. Yeah, I've also been watching The Goonies in Space, based on your recommendation.
Oh, have you?
Yeah, with
Treasure
Fox.
Island in space.
Oh yeah, that too. Yeah. It's good. Yeah, really, it's
Yeah.
fun. Yeah, yeah,
Is
and
Fox liking it?
loving it. Yeah,
Yeah, good.
he does. He said, "I don't know what's going on." Like, yeah, me either. I got no idea what's going on, man. But it's fun.
Yeah,
I'm digging it.
that's well made.
Yeah. But the big thing this week for me was watching Jensen Huang's keynote at CES.
Okay.
The CEO of NVIDIA. Did you catch any of the NVIDIA CES news? Oh
No.
my God, man.
Nope.
Like, I've been reading Kurzweil for 30 years. We are in the middle of what Kurzweil's been predicting. So one of the 10 things that he announced at CES was their new AI platform, the B200, built on the Blackwell GPUs. So about a year ago, they announced the new GPUs, the Blackwells. This new platform has 8 NVIDIA Blackwell GPUs, 1.4 terabytes of GPU memory space, 72 petaflops of training performance, 144 petaflops of inference performance, I ran the numbers through GPT afterwards. So the current, all of the AI implementations out there, OpenAI and Google stuff and Anthropic and XAI are all built mostly on the A100s that came out, I think 2020 originally, 2020, 2022. In that period, they were producing them. This B200, its performance increase on the A100 is 67.7 times.
Ooh, wow.
Now, Moore's law used to predict a doubling
Yeah.
every 1 to 2 years.
Mhm.
This is nearly a 70 times
Wow.
improvement in a few years. Jensen said, we're not just rewriting Moore's law, we've smashed it and we're writing something new right now. They announced a $3,000 PC that will be able to run an entire LLM on it.
Wow.
Something that you would have had to spend, $10 million on a couple of years ago. They're coming out with it in May, a $3,000 PC. You can train an LLM on it. They're coming out with these are US dollars, $12.99 laptop that you can train an LLM on. They've come out the new version of their in-robot / in-car AI system, which can run an AI on it. He said they're in full production. Their current version is the standard in most of your autonomous vehicles. This one is, I think he said, 20 times as powerful as the one that's available currently today, and they're already in production. They're just blown away all of the growth numbers on this stuff. The technology, and he said they got their AI, so they're building. They've got and that's the other thing. They launched their software. It's called World. It's been trained on something like 21 trillion hours of video. It's their basic AI training platform that you can run on all of this stuff. They're giving it away for free on top of all of their hardware to train AIs on, from robots through to, everything. Their package, it's just going to be available for free. And they're using their AI to design the next iterations of the platforms, the chipsets. So it's just, Kurzweil's always predicted you get to that part of the exponential curve and it just explodes. I was watching this thing like quite literally with my mouth agape, just shaking my head. Like even though I've been reading this stuff for 30 years, to be living through it and watching these announcements is mind-bending stuff. What we're actually doing there, to see it come true in my lifetime, is mind-boggling.
So is NVIDIA producing laptops for its own hardware, or was it going to put its chips into other manufacturers' hardware?
They're coming out with their own. I mean, I assume they're not fabbing the whole thing themselves. I'm assuming they're partnering with someone. I don't think he mentioned that. I didn't drill down into it, but who's manufacturing the stuff? Probably getting it built out of China, like everybody else. And their Biden administration's just come out with their new iteration of you can't sell the good shit to China law, and NVIDIA put out a press release saying this is bad, this is going to wreck American competitiveness in the world, you can't do this. They're one of many parties that are pushing back on the Biden administration. So we'll see what Trump does when he gets in, because it's a big chunk of the global market that they're not allowed to sell their stuff to now, so it's going to hit their revenues, but they're basically saying if American companies aren't providing the backbone for all of this revolution, then Chinese companies will be, and it then becomes the standard. And, China is doing fantastic. There's a Chinese AI called Quen, Quen, that has just launched a thing today where you can post-train your own AI. They're saying for $500 $500 on their system. You can run it on for $500 on something. China's catching up very quickly to the US on a lot of this stuff. They're going very, very hard. Wouldn't surprise me if they overtake the US. I mean, OpenAI's got a bit of a lead, and China can't buy the Nvidia stuff, so they're having to get their own their own stuff, and they can't get out of Taiwan, all that kind of jazz. But
Yep.
anyway, it's a crazy time, man. It's a crazy, crazy time.
So the upshot is buy NVIDIA and short laptop producers, Microsoft and Apple.
Well, no, I don't know that these NVIDIA laptops are going to be good for anything other than running an AI on, but
yeah, right.
they're not going to have other, you're not going to be able to run Windows on it or an OS or Linux necessarily to do anything else. You'd probably be able to run some version of Linux in order to run the AI training software on, I guess. But it's, yeah, like every hardware platform will have these sorts of chips running in them in the next few years. You will have AI capable chips in everything, that from your Roomba through to everything else that can benefit from an onboard local AI, not something that needs to talk to an AI in the cloud, something that does most of the inference locally, and only needs to call out to the cloud in certain situations and circumstances. But yeah, so
Well, it's
there's that.
mind-boggling.
Yeah,
It's mind-boggling, yeah.
and there's a thing, the one of the goals in AI has been what they call AGI, artificial general intelligence, which most people define as when the AI can do everything as good as, if not better than, any human in that domain. So better doctors than doctors, better mathematics than mathematicians, better science than scientists. And there's been a change in just the last month in AI leadership circles, like people who are working in OpenAI and Google and Anthropic and XAI and places like that, where they seem to be inferring that it's done. Like, not that it's built, but they now know how to build it, and they're confident they're going to blow through it. Now they're talking about ASI is what they're focusing on now. AGI is basically done. They figured it out how to do it. It's just they're probably just waiting on compute capability, bigger data centers. They're now focusing on how to get to ASI, super intelligence. But yeah, it's a weird time, man. It's a weird time.
All that power and only Elon and Donald to look after us. It's going to be strange.
You see that Bannon has now made it his mission to take down Elon.
No, I thought he was getting behind Elon's push to conservatize the European continent.
No, Bannon, who's not part of the Trump team anymore, but is sort of MAGA aligned, has come out the last couple of days and said Elon is fascist and evil, and he's made it his mission to bring him down. So MAGA's continuing to tear itself apart.
How is he going to bring Elon down?
I don't know, but when Steve Bannon calls you evil, it's like Hitler going, that guy's really bad.
Yeah.
Oh God.
And Hitler would have called someone evil for sure. Churchill, I guess, or Stalin.
Jews mostly. Jews, yeah. The Jewish banking cartels. Yeah. I don't know, man. It's a fascinating time to be alive.
Yeah, I'm glad you're keeping me updated because I don't come across much of this stuff at all in my reading.
Yeah. Yeah.
And I guess I'll wake up one day and I'll be a pet. A bug.
Yeah. Well, it could play out in a number of different ways.
Yeah.
We'll
Uh,
see.
like I said, it's lucky we've got Donald and Elon to help this all play out to our advantage.
Well, I've come to the conclusion that, and the other thing, obviously, you see what's happening over there is all of the tech leaders now are getting behind the Trump
Mm.
Musk thing, and I think they all have come to the conclusion that this is it. This is the end of times. This is the speed run to the
Really?
finish line. Oh yeah, I mean,
Really?
if we're looking at AGI in the next year or two and ASI at some point closely on the heels of that, we're entering the world of massively intelligent machines and robots running those things.
Mhm.
That this is it. Like, this is the last 5 to 10 years of life as we know it, and it's a speed run to the end. No one knows what's going to happen when we get there, but they want to be in a position to have a good, decent chance of surviving, playing
Being
some
on
role,
being on the
doing
ark,
something,
the space ark.
being on the ark. Yeah, yeah. Uh,
Yeah, look, you're probably
and
right, but I think from what I can see, people like Meta, Zuckerberg is just they're just using Trump as a way to reduce their costs
yeah, that's a big part of it too. But you add to that the amount of money that they're all sinking into this.
into AI. Yeah.
Yeah, like insane amounts of money they're
Mm.
putting into all this sort of stuff now, and it's like batten down the hatches. We're going for it, and I think Elon. It's hard to know how much of what he says to take at face value, but I think he thinks this is the end run, and he is gonna do whatever he has to do to be the guy who's running things in
Mm.
during the end run, because he sees himself as the techno messiah. He's techno Jesus, South
Yeah.
African Jesus. Um,
I don't know if it's an end run, but I think he's always been that way. He's just an opportunist who's seeing a chance to get up another one up in the corporate world. He's already the world's richest man. He's not going to give that up easily.
yeah,
And yeah, I guess you don't get there by not engaging with politicians or controlling politicians.
yeah.
Yes.
He's removing all of the obstacles right
Yeah.
now.
Yeah. Right.
Governments, maybe his competition. We'll see what happens.
Oh, yeah.
Anyway,
He's in it for himself, for sure.
yeah. Whether or not he has a big vision for humanity that
Yeah.
he wants to shepherd through or not remains to be
Tesla
seen.
workers. We're going to be on the Tesla production line.
Robots will be far more cost effective than
Robots
humans.
will
So.
be lashing us. Like,
Oh, right.
yeah.
Okay.
Why pay 10,000 for a robot when you can feed me 6 grains of rice a day and get me to build a Tesla? Oh, yeah. Our overlord, our glorious head.
Uh, well,
Yeah.
we have all this to look forward to.
Yeah, it's fun, isn't it?
Thanks, TK. Have a good week.
You too.
2 weeks.
Man.
Have a good 2 weeks. I'll
Yeah,
talk
I'll
to you in
be
two
one next week.
weeks.
Yep. Thank you.
Have a good 2 weeks.
Thank you.